All right, everybody, we are back. Thank you for tuning into Blockhouse, and I'm here with two of the goats of the industry, Kevin and Solomon. Thank you guys so much for being here.
Thanks for having.
Thanks, Will, for having us.
Appreciate you both a ton. And as we get into this, would love to just get to know you a bit better for the audience that's tuning in. So, Kevin, I'll kick it to you first. Tell us a bit about yourself, a bit about Anchorage and what you're working on.
Yeah, I'm the head of policy at Anchorage Digital. I think most people think of Anchorage Digital as a custodian, but we do much more than that. We are the first federally regulated digital asset bank in the U.S. We've had that charter for 5 years. But in addition to custody, we provide stablecoin issuance, staking, settlement services, trading, and we've really become a one-stop shop for institutions.
Amazing. Love it, man. And Solomon, same question to you.
Yeah, so I'm general counsel at Plume. So we're a tokenization startup backed by crypto and TradFi investors. On the TradFi side, we have Apollo, Fidelity's F Prime Fund, Brevin Howard, Nomura through Laser Digital, their VC affiliate. So yeah, we're really trying to target the market that will exist at the intersection of traditional finance and DeFi. And so we've developed a layer 2 using the Arbitrum stack that includes AML compliance at the protocol level. We also have a vault protocol that we developed that we act as an administrator for, and we also curate some vaults. And before this role, I was at the SEC. I was there for about a year and a half. Before that, I was at Uniswap and Chainalysis in the crypto space, and then also worked 8 years in traditional finance at a company called IHS Markit, which is now about 40% of S&P Global. And before that, I worked at the CFTC.
Amazing. And you made this transition so easy for me. I'm going to kick this one over to you first, Solomon. I wanted to get a bit back into the background of policy. So how did you end up getting into this policy work? What interests you about policy? And what are you individually advocating for in Washington right now?
Yeah, so I'm a regulatory lawyer by training. I got kind of my start in DC at the CFTC after Dodd-Frank, after the financial crisis, where CFTC under Gary Gensler got jurisdiction over what was then an unregulated market, the over-the-counter derivatives markets. And so I helped write those rules, both at the staff level, and then I worked for a commissioner where I got exposed to the political side of policymaking. And so kind of jumping back and forth between the political, the policy, the regulatory, the legal has been something I've been doing for my entire career. Digital assets is kind of at a unique place where it's a new technology. It reduces reliance on intermediaries, or it changes their functions. So it requires me to draw from the skill set that I developed early in my career at the CFTC, which is how do we take traditional financial regulatory principles in terms of protecting customers, ensuring market transparency and integrity, promoting capital formation, combating illicit finance. How do we translate those goals into new markets? And so that's what I did at the CFTC as a regulator, a bit more at the SEC, but also in all the roles that I've had, across all the firms that I mentioned before. At Plume, we're targeting the side of the digital asset space that's particularly challenging from a regulatory and policy perspective. Securities investments are heavily regulated across the world, and this technology, has the ability to hit all those, to promote all those regulatory goals that I mentioned. But it requires working very closely with policymakers, and so that's what we've been doing here at Plume. I recently testified at House Financial Services on tokenization back in March, where I laid out set of recommendations, including suggestions on how to improve clarity and what the SEC can do in that direction. So yeah, this is definitely something that we think about a lot at Plume and in my current role.
I love that, man. And we're going to get into clarity a bit as well. And I'm so grateful for that thoughtful answer. And Kevin, same question over to you. Would love to know a little bit about your background and what you are advocating for right now.
Yeah, I mean, from a young age, I've always been interested in politics and money, right? So I started working on the Hill right after college, worked there for over 7 years. I worked for the House Financial Services Committee, Whip Emmer, Congressman Barr, on a variety of different financial services issues, from banking to monetary policy. And then when the opportunity arose to work at Anchorage, I was very excited to join. And for the last 4 years now, I've been leading government affairs. And most recently, we've been focusing a lot on clarity, access to Fed master accounts, and also the implementation of the Genius Act.
And that's you made this transition so perfect for me. So the Clarity Act has passed the House, Senate Banking Committee, and the Senate's early August recess is really the last window we have this year. I'm curious, and Kevin, I'd love to start this with you. Why does this particular bill matter so much to the industry right now for folks who haven't been paying as close attention? And what are the trade-offs that you're seeing if it passes as it's currently written?
I think it'd be a huge unlock for industry. I think you're going to see a lot of capital deployed. I think you're going to see more TradFi in crypto. I think you're going to see more crypto native projects unlocked. So it's going to be a huge win, much like we saw with like Genius, right? That led to a lot of onshoring of foreign stable coins, whether it's Tether, whether it's Athena Labs. We brought both of those to the United States. So really, it just provides the regulatory and legal framework for people to be confident to invest over the next several decades.
Completely agree. And Solomon, same question over to you.
Yeah, I'll just piggyback off of what Kevin said and just give a specific example. So there's Title 4 of Clarity lays out a framework for banking regulators. Basically, it says, look, banks can use this technology. And so that's something that the current banking regulators have done through informal guidance, but having the power of a federal statute, which every banking regulator, regardless of who their leadership is appointed by, will have to honor and comply with that statute. So that's really important for banks in particular, because for them to migrate their infrastructure, they don't want to have a situation where they build, they spend the next 2 years, 2.5 years building out to a digital asset infrastructure, and then have future leadership at the banking regulators pull the rug out from under them. It's expensive, it's risky, and so having the force of a federal statute behind those technology upgrades is going to be really critical to bring traditional finance onto blockchain rails.
And this, y'all, this is like one of my favorite conversations. I have so many more questions, but one of the things that I think is important to touch on is like crypto policy and policy in general on the Hill isn't just one fight. There's multiple battles, multiple lines of conversation happening at once, whether it be between regulators, whether it be between legislators, whether it be with lobbying groups. So we've seen stablecoin and banking rules already got resolved in some ways with the Genius Act, while securities and tokenization rules are still very much unsettled. So I'm curious from your perspective, Salman, why does that split matter? And why is Clarity Act actually the thing that closes that gap for people that are just coming to this conversation for the first time?
Yeah, so I'll echo a bit what we just talked about, which is the progress we're seeing when it comes to stablecoin policy is really being pushed forward by the rules that the agencies have to, that Treasury in particular, the banking regulators have to implement under Genius. So that's the reason why we're seeing such structured progress and a clear endpoint and a lot of investment across crypto and TradFi to come up with new mainstream use cases for stablecoins. We don't have something similar when it comes to tokenized securities or crypto assets in general. And so this legislation will provide that structure and that federal backing, legislative backing for those initiatives, which will put them on much more stable footing than if it's done, as discretionary rulemaking. Another key point I'll make, just particularly on tokenized securities, is the bill calls on the SEC to upgrade its rules, or update its rules, I should say, to reflect digital asset technology. That's something that they're going to do anyways. But one of the things that they have to take into account is legal risk when they come up with these new rules. And discretionary rulemaking is going to be much harder for them to defend in a court, particularly by, let's say, incumbents that might want to challenge those rules, and whether the SEC did all the relevant analysis and met all the procedural requirements. This legislation limits the legal risk for the same policy relative to a world where we don't have this legislation. Speaking specifically for the SEC, and similarly for the CFTC and the other regulators.
I love it. Yeah. And Kevin, on this line of thinking, this past week you were spending time on the Hill. Same question to you, but also how's the appetite feeling on the Hill? Like, how is everyone responding to this? What are you seeing?
Yeah, I think there's a lot of fine tuning around specific provisions right now, whether it's developer protections, illicit finance, some of the agriculture committee language around conflict of interest rules. And then, of course, there's a big political debate over the ethics provision. There's some back and forth going on that. Hopefully, we get a major breakthrough on that, and that's what will spur the bipartisan support we need in the Senate to get this enacted into law and get it over to the House pretty quickly.
I completely agree with that point. And one of the things that I noticed when I was on the Hill talking about this is this idea of like consumer and developer protections. And I think one of the big advocacy points of our whole industry is that we're rooted in consumer and developer empowerment. And so this is very, new native industry that, regulators are doing their best to kind of get ahead of and get with the deal. And it's really reassuring to hear that people are really starting to get it to themselves. Like we need to pass this regulation. And this kind of brings me to my next point, which is while the US is working through this and taking the time to do diligence and move it through the legislature, the rest of the world hasn't been waiting. The EU MiCA framework is already mature enough that old licenses expired, I think, on July 1st. Hong Kong, Singapore, the UAE, they've all built out their own, as well as South Korea, Japan, and Nigeria are moving through their own legislation for digital assets, while countries like the UK are deliberately taking more time and waiting until 2027 to get it right. So, Kevin, I'll kick this to you first. Do you think the US is maybe falling behind by taking this long, or do you think it's worth taking our time and making sure that we get this right?
Yeah, I think we are starting to fall behind. I will say, though, that we can catch up really quickly. I think that's what we've seen with the Genius Act. When we talk to central banks around the world, a number of them, since the passage of that law in America, have got their act together and started moving forward with their own legislation on stablecoins. I think when the United States and the EU lead on important legislation, the rest of the world takes notice. So I would say we're already in a really good position financially in America. And when we get our legislation passed, it's going to help set the standards, and we're going to do really, really well.
I think the rest of the world is looking to the US from two different lenses. One is for leadership. A lot of jurisdictions are going to follow whatever we do. And then the second is some other jurisdictions are looking at us as a competitor, and so they will be prompted by progress in the U.S. to also accelerate their own plans for making use of this technology consistent with their national priorities. I'm going to give you a specific example, which I think is really interesting, and I talked about this in my testimony from a few months ago. Um, so in Hong Kong, the Hong Kong Monetary Authority published a study in 2023 where they looked at the effects of tokenization on bonds. And they found that tokenizing bonds increase liquidity through features like real-time settlement, through other features like being able to hold fractional shares, which limits the liquidity impact of having large minimum investment amounts, among other things. And they found more liquidity. And the net result of that was for corporate and government borrowers that reduced their cost of capital. And the benefits were so validating that they went ahead and they came up with a program to subsidize corporate issuers to issue their bonds on chain. In contrast, here in the U.S., we have legislation from the early 80s, TEFRA from 1982, which has very punitive withholding tax requirements for bearer bonds. And arguably, most tokenized bonds, particularly if they're directly issued on chain, would probably qualify as bearer bonds. So Hong Kong, which is a part of China, is subsidizing corporate bonds while we still have, legislation on the books that's penalizing a similar type of thing and making it hard for our corporate issuers, for our businesses, to take advantage of those, real benefits.
And you bring up a great point, which is, if people are listening to this and they're getting inspired by this conversation, want to participate in how they can help move this forward, like for the folks who are not as well versed in policy and the workings of the Hill as you two are, like what's a way that people can get involved?
You can call your member. So one thing that I like to point out when I talk to members on the Hill, particularly those that are skeptical, is depending on which poll you're looking at, even like the polls that find the smallest amount of crypto investors, we're looking at 10 to 20% of the population, depending on which poll you want to believe, that's invested in these assets. And the demographic that's, the 10% or the 20% or something in between, it tends to be young men, which is a demographic that's, disproportionately, diverse. And this is a population that's been a swing vote. I think it helped deliver the White House to Trump in our last election. For any politician, they should be thinking about, well, how do I respond to this demographic? And so I'm really hoping that lawmakers will act in a way that will improve, the standing and the protections that demographic, really needs. That at the same time will, meet all these, broader geopolitical, economic competitiveness goals at the same time. So to me, it seems clear. One of the things that we're hearing over and over on the Hill is, while we get that, it is I have to go back to my constituents at the same time, and I don't want to get primaried because this is particularly sensitive for Democrats, because I caved to Trump, and I blessed some of the Trump administration or the Trump family's shenanigans relating to crypto. So it's a really difficult political calculus that these members have to take into account, and we'll see how it all lands. But hopefully we can get to some kind of resolution on this ethics issue.
Agreed. And Kevin, I saw that you were nodding agreement and you were going to jump in. Please feel free.
Yeah, I think sharing like any personal stories about use cases where digital assets have been helpful. I think like some of the common stories you hear about have to do with maybe friends that in places where the domestic fiat currency is not very stable, and they've had to transfer their domestic currency into, say, stable coins or some other form of crypto, or just kind of the vision that you see. Like one day we're probably all going to be using stable coins to pay for our coffee. The next time as you meet with your friend, or to pay for something, I don't know, maybe make payments on Uber or whatever it may be, right? You open up your digital wallet and you'll have stable coins, whether it's Apple Pay or bank to bank app or something else. And just explaining like how that technology is beneficial to kind of everyone across the board. I think that's really helpful. I think DC really loves anecdotes to share with everyone, in addition to like cold hard facts.
Yeah, no question. I mean, that's when I was in DC last. A lot of what I spent my time doing was going and speaking to House Democrats about how, similar to what your point was, Solomon, like the fears that they have around this, partisan politics or bipartisan initiatives. That at the end of the day, what we're trying to move forward is not a partisan issue. It is a American regulatory need, right? We need this innovation to be here. It benefits all Americans, Democrat or Republican. And if we don't end up passing it, unfortunately, we're going to continue to Kevin's earlier point, we're going to continue to fall behind the rest of the world because they're moving this stuff forward. And so I think it's really interesting how, in the same breath, it's about, protecting consumers and protecting Americans. We're actually, doing the opposite by not getting this through. And I was curious, if this does get resolved this session, and I know there's been a lot more effort on both sides of the Democrats and the Republicans to do this. Let's say that it doesn't get resolved this session and we're back where we started. Does the industry freeze or wait? Does it keep building regardless? What does this mean for the future and how we move things forward if the regulation doesn't get through?
So I think there's actually an opportunity in September if we're not able to prevail before the start of the August recess. We'll have to see how that all plays out. I think post-election it gets more difficult, but I think long term, there's already been a big change in DC, almost a 180 in terms of the bipartisan support for things like tokenization and blockchain. I think a lot of people understand that that's the future plumbing of the world financial system. And even if we do have change in leadership in the administration down the road, I think we're going to have like more favorable administrations, whether it's from the left or the right, going down. Yes, like some of the rulemakings that aren't backed by like recent laws like Genius, maybe don't have as strong a footing. But I do think there'll be more marginal changes on a lot of these things. And the evidence for that is the success we've had on some of these other votes, like the repeal of SAB 121, the passage of Genius, right? Just the fact that whenever we have a vote on anything related to crypto now, we usually get between 20 and 40% of Democrats to support it, and nearly all the Republicans. So I think things have just fundamentally changed, and it's because people understand the benefits of these assets. There's with digital assets, you can reduce counterparty risk because you have atomic settlement. The settlement, like with being instantaneous, can even be more affordable. Even national security can be enhanced with digital assets. I think that's one thing that's not talked about enough. Cash is you can't track it all, right? And digital assets, if it's a public blockchain, there are tools you can use to figure out who sent the funds, which can be quite helpful to law enforcement, to national security, and even relative to like traditional banks under BSA. Once those funds leave the bank, they can't trace them. With digital assets, you can transact or you can watch multiple hops later, multiple transactions later. So there's some real benefits to that, and I think that's starting to win the day. All these different arguments, and that's why I think digital assets are more and more accepted in DC.
Totally agreed. 100%. And Solomon, please go ahead. I saw you had a point you were going to make as well.
Yeah, so I think if clarity doesn't pass this session, what does the landscape look like next year, and how do crypto companies adapt? One of the things that I think has changed on the Democratic side since the Biden administration is that there's now recognition that regulation by enforcement wasn't an effective policy tool, nor was it good for the Democrats politically. That means that Democrats who are going to have more influence, most likely, next year, are going to be looking at regulation and legislation. And key staffers I've talked to on the Democratic side that represent key offices at the various committees have indicated that if this doesn't pass, they're ready to take up the pen and come up with their own approach. Now, whether the president will sign it, whether they can get sufficient Republican support, when the tables turn, I don't know. But I think policymaking on the Hill will continue after the election, and I think policymaking will also continue at the agencies. So while it won't be as durable, and it won't encourage as the type of adoption that a big bang like a piece of legislation would, I think through the piecemeal regulatory efforts that the agencies will conduct, we'll also see plenty of opportunity for crypto firms to service the market that's going to evolve under these new regulations. So I'm still hopeful that we can make progress on legislation as well. But for sure, we're going to see more regulatory action. And actually, a lot of the regulatory action at the SEC and to a lesser extent the CFTC has been bottlenecked because they're waiting to see if this legislation is going to pass or not. I think you're going to start to see an avalanche of rulemaking and guidance coming out of the SEC if clarity doesn't pass.
Yeah, no, and it's been a really amazing conversation, gentlemen, and the points you guys have been making are amazing. And Kevin, I noticed when Solomon had been talking about what Dem-led market structure bills could look like, you perked up. I'd love to hear your thoughts on that.
Yeah, I think presumably most people think that the Dems will take the House, right? And possibly even the Senate. That's more of a 50-50 chance there. But you would see, Maxine Waters probably lead efforts to the House Financial Services Committee. I think one major difference that you would see in legislation proposed by her versus Republicans is dealing with vertical integration. Gensler talked a lot about this. Atkins at the SEC talks about a super app, right? Kind of one place where all these different financial services and products can be provided. I think what the Democrats would push for is more segregation of these different types of entities, um, and that I don't know if there's enough support for that among Republicans and industry to get that across the finish line. But that's the flavor I would see the Democrats pushing.
Yeah, I think there's going to be a number of areas where I think Democrats are going to have a different approach. I actually posted a tweet about this earlier today, but one of the areas will be in terms of who gets the lion's share of the market. I think Democrats are going to be are going to give more authority to the SEC than the CFTC. I think that's one very likely outcome. That just seems to be the zeitgeist on the Democratic side. I think also when it comes to illicit finance and regulation of DeFi, I think they will probably go a little bit deeper into the DeFi supply chain than Clarity did. I do think there will be developer protections as well, but they may end up being narrower than what we see in Clarity, which would not be generally good for DeFi as it is, but for institutional DeFi that it might be a worthwhile trade-off.
Yeah, no, it's going to be a really interesting, future. And I think, not just with the federal legislation that's happening, and we can maybe do a follow-up on this. It's also, I would recommend everybody pay attention to your local and your state elections because, as we start to unlock more federal regulation, it's going to allow the states to become more empowered, more emboldened, and give them the baton to start to pass things through as well. So really encourage everybody that's listening to this episode, follow these speakers and their companies and what they're doing so that you can stay informed and pay attention to what's happening in your state and your country, because this is really important stuff. And I really want to say a very special thank you to both of you for the work you're doing on the Hill, to all the trade associations, all the lobby groups, and all the companies and individuals, because this is this historic moment where we're setting the future for our industry and builders and folks to come for many years. So thank you both a ton. I have one final question for the two of you. And Kevin, I'd love to start with you. Looking into the second half of the year, what are you most excited about, both with Anchorage, both with policy? Just, what are you looking forward to?
I think we're going to have more exciting news on stablecoin issuance. I think that's going to really grow, not only at Anchorage, but across the board for everyone. I think the predictions where the stablecoin market's going to be over $1 trillion by like 2030 or more, I think that's pretty accurate. The other thing is Fed master account access. I think there's going to be a lot of developments on that because of the executive order, the rulemaking with the Fed. So I'm tracking that closely.
Yeah, I think in the real world asset space, what the SEC is going to come up with under the innovation exemption and all the other initiatives that they've announced and will likely announce if Clarity doesn't pass is really going to help accelerate that market. Right now, it's growing at about 5 to 8% a year, so roughly doubling in size every year. That's going to fall short of a lot of the ambitious projections we've seen from major banks and consulting firms and global financial authorities, the World Economic Forum, etc. That's going to be what the SEC ends up doing in the next few months, starting in the next few months, but probably extending it over the next couple of years. I think is going to help unlock the exponential growth needed to get to those outcomes.
Man, well, thank you both so much. I have so many more questions, but we'll save it for the next time. I'm sure the audience is rearing for more, but thank you, gentlemen, so much. I know you're both incredibly busy and really can't express enough how grateful I am for the work that you are doing, your companies are doing, and helping our industry get this stuff passed. So thank you both a ton.
Thanks for setting this up.
Thanks, man.